Thank you for joining us again on Frontier Opening Bell, a program of Frontier Africa Report. My name is Temple Ashaji, and with me today on the program, we've got Joshua Adebisi from Vertical Capital Management and Boson Amofaye, our executive editor at Frontier Africa Reports. Let's hit the indexes with the way they settled yesterday, beginning from Nigeria, as always, which was up again some 21 basis points on Monday. BRVM in Ivory Coast, positive 56 basis points. The Egyptian Composite Index was marginally, it was down yesterday, actually, some 0.14%. Nairobi Stock Exchange in Kenya jumped after closing negative on Friday, jumped yesterday by 1.44%, and Johannesburg Stock Exchange was up by 89 basis points to open the week, given some rally that we saw on Naspers. Moving on to Eastern African markets headlines, where Africa FDI in 2020 got a jump of $5.5 billion in Egypt. Nigeria came next with $2.6 billion in FDI, and South Africa, $2.5 billion in FDI. Kenya is expecting its economic growth will be around 6.4% this year, 2021, and then there should be some kind of a slowdown by 5.5%, or slowdown to 5.5% in 2020. Jubilee Health Insurance got some profit of 535 million shillings for the 9 months to September 2020. Car maker Mobius Motors opens a new 330 million Kenyan shillings plant in Nairobi, Kenya. This is an OEM that has been around for some time in Nairobi now. Ethiopia Tax Agency raises 22.4 billion birr for the month of December 2020. Boson, let's bring you in to look at some of these key stories across eastern part of Africa. FDI, let's start with the FDI from Egypt to Nigeria and South Africa.
So, Temple, if we just go straight to these stories, I'm sure Joshua Adebisi will have his own views when it comes to this. I think it's one story that resonates across the continent. And as Ali always say on the show, Ali can't cite you, Egypt is the destination, is the country to beat on the continent right now. Make no mistake about it. Nigeria, South Africa, Kenya are technically taking the back seat right now. Egypt, Morocco are taking the front seat as far as international funding is concerned. They have a very warm handshake with the European Bank for Reconstruction and Development. They're in bed with the European Investment Bank. They got massive funding from Afrexim Bank even last year, because that's where the headquarters is. And the whole relationship that Egypt has with some countries in the Middle East, across the Mediterranean as well, Greece on one hand, Turkey on the other hand, and what have you. Look, foreign direct investments keep flowing into Egypt, whether there are those who wants to do computer chips or getting orders to build these yellow double-decker bus that are used in London, in Britain. They're made in Egypt. They're doing a whole lot of things. They're getting the special economic zones up and running. They're getting funding into oil and gas, into solar energy from AFDB. Look, everybody's just heading to that country. Even in healthcare with the COVID-19, they got a whole way ahead of the rest of the continent. So I give it to them that if you combine Nigeria and South Africa's FDI together, Egypt even beats the two largest economies on the continent. So why are we saying, who is the biggest economy on the continent right now? I'll give it to Egypt, because that's where the whole money is going. Then if you go back to the Kenyan story around the 6.4% GDP outlook for this year and for 5.5% for next year, not really bad, by the way. I think the Kenyans has a whole lot more serious approach to how to work their way back from the debt issues they have and all of that, and get the economy going. If you look at the IMF and the World Bank outlook last year, Kenya and Ethiopia seem to be ahead of the curve. Jubilee Health Insurance is one company that, if you look at the insurance that they have to provide during the pandemic, you're not surprised that you're looking at 535 million shillings kind of in terms of improvement. And the Mobius Motors is one big story again. If you look at where destination investment is going, Temple, when you talk about opening a new plant, that means that something good is going on there. These countries are positioning for the AFCFTA. I'm sorry, with due respect, and Joshua will agree with me, I haven't seen Nigeria is making very bold move under the AFCFTA. The whole house is still in disorder, in disarray, and I can tell you that from the inside here, that there is no clear cut. Yes, the customs have published some few documents, NOTM published a few things, but at the back door, there's a whole lot of clarity. I haven't heard a single word from the Minister of Industry, Trade and Investment of the Federal Republic of Nigeria on the new AFCFTA, and these guys are making headway. Thank you.
I agree. I mean, that's something that we have to basically look forward to from Otumbani Adebayo. Well, before we move to the Western African market, Joshua, have you got to bear your thoughts on the FDI for Egypt, Nigeria, and South Africa?
Well, I mean, Boatin basically summarized it, but I think what I would add to that is that historically, the main reason why Egypt is in the position that they're in right now is simply down to the fact that it is so easy for investors to enter and exit their market because the foreign exchange market is pretty much open and liberalized. So that means that, you know, they don't need to go through any kind of, you know, they don't need to jump through hoops when they're trying to leave the market or even when they're trying to come in. You know, if an investor wants to invest in the Nigerian market, you know, the CBN will insist that they come through official channels and get given, you know, the official rates. But the truth is that they don't value the naira at the official rate. So $1,000 in real market, you know, value sense is worth maybe 475,000, 470,000. But the CBN would insist on giving them 380,000, and no investor or very few investors will, you know, be happy to take that deal. And it works both ways. So if you want to do an investment that will be even a long-term investment, you are not sure that even if that investment is profitable in Nigeria, you'll be able to extract any kind of value back to your home country. So what's the point of making that investment? The issue with South Africa is that their own economy is has been in a bit of trouble for a while now. So their investments will obviously be lower. And, you know, they're on a very different trajectory from the rest of Africa. So their economy is far more mature. So their level of investment is going to be much lower because then they're not really looking for outside investors as much. And then their economy is not even, you know, in a conducive environment right now. But Nigeria is not that case. Nigeria should be looking at double what Egypt is doing in terms of FDI.
Right.
The truth is, the level of investment that we need is much higher, unfortunately. But we're not going to attract it with our current policies.
Right, right. The reforms that they embarked on a few years ago has actually paid off. That's what you're saying in essence. Now, let's move on to the Western African markets. Yesterday, we got expectations around the CBN's MPC meeting, rates decision, which takes place today by 2 p.m. Nigerian time. They should be announcing that. On Union Bank, no bid yet for Atlas Mara's stake in Union Bank. That's the feelers that we're getting at this point. Ecobank Nigeria secures some 50 billion naira 10-year subordinated loan. And MTN Ghana gets approval from the Securities and Exchange Commission to buy out the shares of incomplete IPO subscription that they actually embarked on some few years back. Again, let me quickly bring you in here again, Joshua, to speak to the Union Bank story there. I'm not sure if you have some outlook to give. If your views about the CBN MPC is also changing today, you could also give us that.
Well, for the CBN MPC, the general consensus within the market is that the MPC is going to hold rates at current levels. Just due to the fact that obviously, you know, they cut rates by 200 basis points last year, and, you know, the last cut was, I think, in November. So there hasn't been enough time for these, you know, policies to, you know, take effect and start to yield results. Although, to be fair, due to the level of inflation and, you know, economic uncertainty that we're seeing, I personally don't think it would be too surprising if, you know, they decided to embark on a further cut. Maybe not now, but sometime during this year, depending on how things, you know, play out. But I think overall, generally, the direction that we're going to see the MPC go in is downwards, because they're still trying to force banks and force individuals to, you know, invest in the real economy, real sector, because, if rates are high, they know that people are just going to plug into, either savings or into fixed income securities. And they have been very, very aggressive in cutting the rates in fixed income securities. A lot of the short-dated papers are very much, in the negative real return space at this moment due to the high inflation rates. So all of these things means that chances are we're going to continue to see either a hold or a further cut. But I think the general consensus is a hold for that. With regards to, first of all, the Atlas Mara and Union Bank, I think attempting to shift that particular market is going to be a little bit tricky, because the chances are, we're going to see either investments. We will not see an investment from another foreign entity, but most likely it would have to be from another local buyer or local investor. So who would be wanting to get into that particular market at this time? It will probably be another bank. Union Bank is actually a very attractive prospect. They've done a lot of, let's not say restructuring, but re-strategizing in recent times, and they've sort of attempted to push themselves in the tier 2 space once again, but they're still lagging behind a few of the other bigger players. So I think it might be a good opportunity for somewhat of either an acquisition by a larger bank that is trying to boost its asset base in order to compete with Access Bank, for example, or for a smaller either tier 2 player to do a combination in order to grow and capture more market share. But overall, I think that will have to play out over a bit of a longer period of time, just because it's a very tricky thing when banks decide to merge or acquire one another, due to the fact that there might be some underlying issues that we have not seen. There might be some debt, some legacy issues that could undermine the viability of any such combination. So I think overall that would have to play out over maybe the rest of this year, probably, most likely.
Well, so far we understand that Access Bank has been fingered as a major contender in this development, actually, and they are looking to use Rothschild and Company to do the purchase, given their inroads into the Southern African markets lately. Both, have you got any backstory to give us as to some of these headlines?
Well, I think some of these issues around, I find very curious the issue around the MTN of Ghana, in terms of what the SEC in Ghana approved. And the whole story, which I read online, which I was trying to make sense of yesterday, was, look, some subscribers, when MTN did an IPO just about 2 years ago, some investors did not complete the information on the subscription paper, which is called the offer for subscription, which was at the IPO. So they didn't complete information on it, and that was a problem. Then MTN is now coming through now, as the SEC. The SEC in Ghana says, okay, they can buy those shares. So instead of canceling those shares, in the manner of speaking, which could happen in another jurisdiction, I think so, if you have incomplete information. But then these shares are already in the system. So the SEC in Ghana says, okay, fine. MTN Ghana, you can buy those shares. However, the investors who bought those shares initially, because it was paid for, will get the dividend that is to be paid, but the shares go back to to MTN, because I had paid for these shares. For example, if I filled for 500,000, 1 million units, and I paid 1 million CDs, let's say, as at the time of the IPO, so I paid 1 million CDs, and the money had gone into the business of MTN and all of that, and now they found out that I filled incomplete data, maybe email, phone number, whatever address, and they now say, look, I will get the dividend, but MTN can buy back those shares. That's the arrangement, but we're waiting for further clarity on that. As far as the Bob Diamond and Atlas Mara is concerned in Union Bank, look, Joshua knows the banking industry. We all know that Access Bank has been hovering around Union Bank on Broad Street, on Marina here, for 1, 2, 3, 4, 5, 6, 7, 10 years, since the consolidation period. In fact, since 2010. they've been hovering around. I think each time they drive past the building, I think maybe the building looks very attractive. I don't know. But Access Bank, Ige Mokwede, Herbert Wigwe seem to have something, an affinity. There's this romance that we don't know whether it is lost or love, whatever it is. There's some kind of romance that they have, and there's a beauty in the eye of the beholder, by the way. So don't let me take much of your time, Temple.
I remember it was about the same time last
year. The eye of the guy who has the money.
It was about
Union Bank sitting next to First Bank. You can guess where Access Bank is really going. Maybe they are going somewhere. I don't know. Joshua, help me out here.
We'll save this conversation for them to digest, actually. Let's move on now to the Southern African market, where Naspers Naspers shares rallied yesterday as market cap surges to over 110 billion rands on the Johannesburg Stock Exchange. South African insurer Santam is processing the claims for 4,000 more clients that were hit by the virus around April last year. And of course, Eastern Platinum raises some 5 million rands via rights issue. Old Mutual gross flows for full year ended December up to 10% into 188 billion rands. Zimbabwe is to list asset holding company on the stock exchange. Let me come to you first, Joshua. The development around the stock exchange. Naspers rallied yesterday just because of Tencent that also made some more than 10% gains in Hong Kong. Then you have the Zimbabwe government looking now to list its assets company. That's a company that has holdings of about 65% belonging to the Sovereign Wealth Fund for that country, and of course the state pension fund company. When developments like these are happening, across the markets, what do you make of the impact on the economy?
Well, what I would say is that obviously any positive movement in any stock exchange and any kind of growth in value is positive for an economy. Now, it depends on how much of an impact it's having in, the real sector, but overall, I think obviously growth in value is still growth in value. Now, as with regards to the JSE and Naspers rally, I can't speak directly towards, the company specifically, but what I would say is that what we have seen recently is a little bit of a mix, because what you have in the market is that although there is still a raging pandemic going on out there, I think there's a lot of optimism on sort of like something coming over the horizon. So with regards to business activity, with regards to growth, I think what we have realized is that due to what the circumstances that the pandemic has brought upon us, it has forced businesses to reevaluate. And the businesses that are sort of coming out on top are the businesses that are going to be able to take full advantage going forward of all the disadvantages really that have been brought to light. So a change in strategy, a change in formation, if you will, has allowed them to sort of grow in a different direction, and also sell the idea to investors that, look, in a few months' time, when enough people have been vaccinated, when we have reached herd immunity, then we'll start to see, a big boom in demand, whether it be for crude and then, for all these other services around that. And all these kinds of growth trajectories that are being predicted is what is really driving optimism in all the markets. We've seen it in Nigeria, we've seen it, across sub-Saharan Africa, really. And that's why we're seeing a lot of investment being pumped into all of these sectors and into all of these companies. And I think that that's really what you're going to continue to see, is a lot of optimism. Now, whether all that optimism is justified, we'll only know, after the fact, after all these circumstances have really been completed, when we've gotten to the point where, business activity has resumed in full. Then we'll know who was, the unicorn and who was the turtle, really. So I think that that's really where we're going to right now. And I think it's just a lot of optimism in the market. And Also, kudos to Zimbabwe, their sovereign wealth fund. That's another thing that Nigeria just has failed to get off the ground and capitalize on, is any kind of sovereign wealth fund that would have actually helped us in a situation like this, and being able to pump money back into our economy and grow our wealth and our influence across sub-Saharan Africa or the world. But all after years and years of pumping oil and collecting billions and billions of dollars, we have very little to show for it with regards to either capital expenditure or sovereign wealth. And that's a shame, because I mean, Zimbabwe's GDP compared to Nigeria's, but I mean, you can't really compare. And yet they have a sovereign wealth fund to speak of, while we do not.
Thank you so much, Joshua. Bosun, let's get your editorial perspectives on some of these headlines.
I think I'll just touch on exactly what he did. Santam Insurance is one company that seemed overwhelmed in South Africa, one big insurance company. Everybody wants some claims for the COVID-19 pandemic. Everybody's blaming the pandemic. So they queue up at Santam doorsteps and everybody wants full value for their insurance. And Santam Insurance says, hey folks, I can pay you everything. I'm sorry, I didn't cause the pandemic. I'm just going to pay you a certain amount of money. They say, well, bring it. Then as soon as Santam opened his envelope and started dishing it out, then additional insurance clients of his clients showed up and they said, well, we too want some payment. Now, they have additional 4,000 claims to process. We hope Santam itself don't need any insurance or any bailout moving forward after he has cleared up all these funds for his client. But that tells you how bad things are in Southern Africa with this. Naspers rally was very okay. JSE moved up yesterday, as you showed us earlier when we started the conversation. And then the emerging markets rally is touching on South Africa a little bit. Naspers is one of the biggest companies on the JSE after the likes of MTN and a few others. Very big rally, 100 billion rand. That's a whole lot of money on the table, if you ask me. And finally, the Zimbabwe story is what Nigeria should take note of. We can put the assets of, look, what is BPE and everything, everybody? NSI is the Nigerian Sovereign Investment Wealth Fund. Just bring them to the stock exchange and the FMDQ, by the way. And you will open up so much direct and portfolio investments coming into this country. People will buy into their own future. And so these are some of the very tough economic decisions that this administration should take to show that, yes, they're interested in Nigeria's future fund. And Nigerians will buy into the future fund side of the NSIA portfolio and say, look, I want to put 100 million or 50 million into this. Nigerians in diaspora can even go through that as well and see something to fund for Nigeria's future.
Right.
But as long as some of these hardcore decisions are not taking place, then I'm not sure anybody who's going to bring in any serious money, just as Joshua said, on the exchange rate side of things.
Right. Thank you so very much for that. Let's finalize now with the Northern African markets. I mean, you guys said it all earlier that, I mean, Northern African market, Bosun, as he hinted earlier, Northern African market is the direct destination for investment at this point in time. Now, look at what the Egyptian Stock Exchange is doing with Tourah Cement, which is buying back some 3.14 million units of shares. Libya Waha oil field resumed production after pipeline work, and a host of the budget deficits that we have in Morocco. Would you want to give your final thoughts on these headlines here, Bosun?
Okay, for me, I think the big story, the share buyback is, we saw what Dangote did here in the first phase of his own share buyback. So it looks like maybe some guys up north the continent are looking at what Dangote Cement is doing, and they're also getting smart. That's a very good way. We talked about Access Bank earlier, flying into Egypt. Now, it tells you what Joshua said earlier. Look, the field is open. Everybody's in the race right now with the AFCFTA. If you're not in key countries or key regions, you cannot be part of it, because the banking system and the payment system is at the heart of the AFCFTA. If you are not in those jurisdictions, if you are not strong there, if you don't have a presence there, look, Access Bank wants to go to Egypt. They're making some moves in Southern Africa. They are here in West Africa. They are somewhere there in East Africa through Rwanda already, and some hold in DRC. So it looks like pretty good business. Thumbs up to those guys at Access Bank.
AFCFTA has been leveraging that, if you ask me, Bosun. What's your final word, Joshua?
Well, okay, just to speak directly to the AFCFTA, I think, like Bosun mentioned, I don't know if there's really any plan. I mean, up until December, borders were closed and we were still raving about self-sufficiency. The truth is that the Nigerian economy on a number of levels is ill-prepared to compete, truly compete with other countries, its neighboring countries to the east and the west and to the north especially. So I think when you look at it, obviously there's been investment in infrastructure, but the truth is this: if they want to see real world results, and I've said this many times, several times, and it's getting frustrating to say, they just need to enact business-friendly policies. Policies that will make it easier to start businesses, operate, get profits, export. Put these policies in place first, then build infrastructure to make it even better. And you will see results instantly. I mean, these are legislations that literally they can sign in to law tomorrow, and we will start to see the results by the end of next month. That's the truth. Is that if you make the environment truly conducive, not this one that they're talking about, ease of doing business. That's the thing. They're not even going after the low-hanging fruit. They're going after things that on the surface of it are making, businesses easier to do. So, business registration is easier and blah, blah, blah. But that's not really getting to the heart of the issue. It's not getting to, the real problems that Nigerians face when trying to operate and, do business in Nigeria. And if they really want to go after those, they can. And if they do that, we will see results instantly, and then we'll be able to compete. And then the AFCFT will actually have a meaningful impact on the Nigerian economy.
Temple, if you allow me, I've never clapped on this program before, on this show before. I'm going to clap this morning for what Joshua says. I'm going to clap this morning. Permit me to do so. Again, respectfully, because, look, we're building infrastructure, but the basics of ease of doing business, it's not being done. Give me a second here. Why should that be? So you need policies that drive the existing structure and whatever. Then you can build all the railways and whatever to everywhere. Folks who already set up businesses in Nigeria wants to survive now, this month of January to February. They're not going to wait for the railway that is going to take 3-4 years to build. The business is off. The man is dead. Everybody's a loser. The government is not making tax. Jobs are not being created. Insecurity and crimes keep going higher. Across the country now, there's no longer northeast, northwest. Let's forget it. Crime and insecurity is everywhere in Nigeria now, in Anambra State, in the southwest, in Ondo State, in Oyo State. So it's all over the Federal Republic of Nigeria right now. So if you can't resolve things that makes business run now, the whole idea of building railway to Niger or Katsina, Potuskum is not helping the small and medium enterprise man now who has some loans he has taken from banks or even from the CBN. It cannot translate into anything for him. So we need to fix that. Instead of all this, we spent so much capex last year to build infrastructure. We did, the budget was 95%. Where is the money on the street? Where is the ease of export for that guy or to do processing? It doesn't work. Thank you. My apologies.
I understand the emotions, but we do hope that government will be able to do something that will at least make investors, happy and give the exact enabling environment that investors really, really want. Thank you, gentlemen, for your thoughts on the show this morning. Bosun Amofaye, our executive editor here at Frontier Africa Reports. Thanks a great deal for your insights.
Thanks for having me.
Joshua Adebisi from Vetiver Capital Management. Thank you so much for your wonderful analysis on the show this morning. I appreciate it. I'm Temple Ashaji signing off on Frontier Opening Bell. Do have yourself a wonderful and profitable day. Bye for now.